Good evening and welcome to the ACcendo Traders Group. This is our stock market update for Tuesday, November 18, 2008. ACcendoTraders.com, effective video technical analysis trade plans that are delivered daily. Each night when we come together, we want to review what we were looking at the day before, set our stops and alerts for those previous watch lists. We always want to check and see what's coming down the pipe with our news, upgrades and downgrades to see how they affect our trades, our positions. We want to see what's going on with our three major indexes. We always scan for new trades. Now, our video trade plans that we put out, you have to be a paid subscriber to get that, so we don't put that in this video. And also, we want to set alert for those new trades. But most importantly, we want to make sure that we have time to spend with our families. So, let's talk about it. What a day today was. The stocks rose 1% in a volatile session. It would be so much of an injustice to leave it right there. I mean, that just does not tell the story that is today. We had the beginning of today, which was HP issued upside guidance for its fourth quarter and the 2009 fiscal year. We also had Home Depot beat their earnings. But at 6 o'clock in the morning, futures were actually down 100. And so these two earnings reports brought the market up, and the market actually started to head up. We had some testimony from the three amigos. We had Bernanke, Paulson, and Blair testifying about what's going on with the bailout bill, and I guess they're leaving the rest of it for the next president to kind of decide how they're going to do. The CEO of Yahoo was stepping down, Jerry Yang. And already I think they want News Corp was what was reported, and eBay, that person doesn't want to do it. We also had the automakers, Ford and GM, they want their piece of the pie of this bailout funds. 7 out of 10 major sectors ended up positive for the day, and again, we did end up positive for the day. But again, that doesn't really tell the story about how volatile today was. We did start off and we ran up probably about that 100. We were up for a while, and then right around noon, out of nowhere, boom, the bottom dropped out, and we dropped 300 points. And then for a change, we rallied into the close instead of selling off into the close. So it was really a volatile day. And, it's one of those things when you look at the story and you look at what's going on here. Let's start with where we said yesterday. Yesterday we talked about we were at a support. We had a key support. We have been in a range of about 8,200 to about 1,000, 9,500 in that range. And so what we need is either the buyers to come in and say, all right, this is a good price, and that's what's happened. Every time we broke through this 8,200 on a Dow, the buyers have come in and said, good price, and brought the market back up. However, the selling pressure, the sellers, the shorts, they're pushing the market down on every rally. So until we can cut off this selling pressure and it can start to ease, they are selling every rally. And so the buyers, at least they're holding strong at 8,200, but every momentum, every rally, every push up is being confronted by the selling pressure of the shorts. So we'll see what happens tomorrow. As far as earnings calendar, we talked about Hewlett-Packard beat, HD, Home Depot beat, Saks missed earnings. We had Disney and BJ's and upgraded, and WFR was downgraded, but that's not too important. As far as tomorrow, we got more economic data, CPI, core CPI. PPI missed today. Building permits and housing starts also today. And then we had the minutes for the FOMC policy statement, which they cut the last time. Now, there could be some language in there that could cause the market to move one way or the other. Probably down, depending on what the language is in there. Now, Bernanke testified today that the markets, the condition, the credit crunch is improving, but still a long way to go. BJ and LDK, Solar, there was some talk about Solar stocks today. They had some good news. Nothing really that I'm going to be paying attention to, and still nothing on the splits calendar. So let's go ahead and pause here for a second and look at our indexes and see what they're showing us on the charts. So here's our breadth indicator, and we're looking at the Dow Jones right now. And yesterday we talked about the fact that we left the buying indicator being above the sort of an adaptive moving average, and now we're below it. So technically that's a selling period. This green line is indicated when it's giving us a buy signal. So we pushed down through it, and now we're back up kissing on it, showing us probably about 20% of the market of the Dow Jones is giving us a buy signal. We're going to pretty much see the same thing as we switch over to the NASDAQ. Let's give it a second here. And you can see again about 20% in a buying. 20% of the stocks in the NASDAQ are giving a buy signal. And once again, we're pushing right back up on it. Let's finish off with the S&P 500. And the theme continues where we're at. So our breadth indicator is showing that we're possibly going to rise back up into the buying situation. But again, remember what we just said. Every rally has been shorted with a lot of selling pressure. Let's take a look deeper into the three indexes. Here we are again looking at the Dow, and what did we talk about yesterday about the buyers coming in? So the buyers did come in and push us higher, but our other theme of the day is that the sellers are pushing every rally. So if we get up, especially, we may get another day up here to the 10 moving average. Let's zoom in a little bit and see if we can get to the 10, maybe even a 20. But again, I expect to see the sellers test this. And remember, we got the FOMC policy statement tomorrow. That also could bring some news, some language change that could also change how the sellers and the buyers are feeling about the market. Here we're on the NASDAQ, and we did, again, push down, but we didn't break this low here. We came real close to that, didn't we? And then we rallied right back up. So nothing has changed with these three charts. We're still in a descending wedge pattern. Here comes the S&P 500. But nothing has changed as far as the layout. The pattern is still there. We're still sitting at support. We're still seeing if the buyers will stand up and hold us up, or whether or not the sellers are going to win the day. And that's why I think tomorrow's language of the FOMC policy could be some type of language to either push us through, or we may rally up here to the 20 moving average. Okay, so now we're going to end on our education portion of our video, and we're using the book Trading in the Zone by Mark Douglas, Chapter 4, Consistency, Thinking About Trading. And yesterday we talked about, you can't let the outside world determine how you are, your mindset. You either are happy or you're not. You're either a consistent trader or you're not. So what Mark does is to take that mindset and how we develop our mindset and applies that to the market. And, if you rely on a market to manipulate your mood swings, then you're going to be as volatile as the market is right now, up and down and all around. You have to be able to define who you are as a trader and not let the market define who you are as a trader. And again, the way we do that at ACcendo Traders is by having a trade plan. That's how we're consistent. That is how we remove our emotions out of our trading. We have rules and conditions. So good traders, successful traders, according to Mark Douglas, they're consistent just because they are. When you have to, it's sort of like baseball or riding a bike or sports, when you hear about these people trading in the zone, and they always say that, well, how do you get in the zone? Or more importantly, when they get out of the zone, you hear athletes talk about, well, I just got to stop thinking about it, and just do it. Trading's the same way. When you start thinking, that's when you start to allow your emotions to get in. That's when some of your non-rules, some of the things that you don't really want to fall to, tend to enter your trading. So either you're consistent or you're not. When you're thinking about it, that's when you start to waver in your decision making. So follow your rules and you'll do fine. Your very best trades were effortless. You didn't have to think about them. They were easy. There was no struggle because everything was available to you. Again, the key to developing the right mindset, the key to knowing that you are who you are and the market does not define you, is when you define yourself, then you don't block information that's going to hurt you. And that's effortless trading. You see it. It's like the matrix and the numbers are falling down and you see the numbers and you see the patterns. You let your technical analysis, fundamental analysis, wherever you are, and you let that take over and you make your decisions based upon what you see and not based upon what you feel. So if you want to learn how to develop this trading system, how to develop your own trading plan, check out the 30-day challenge. If you want to get those stock picks that we talked about earlier, every night we put out our stock picks. There's our link, ACcendoTrader.com/video HTML. That's how to become a paid subscriber to get our actual picks. And as always, check out our blog to get our latest information about what we feel about the market and our latest articles and videos. And I forgot to mention, on the 30-day challenge, we have a ton of videos on there to give you guidance on how to set up your trading plan, how to use technical analysis, how to use market indicators, market breadth indicators, chart patterns, all of that. So check that out. I'll see you guys tomorrow.